All right, good afternoon, everyone, or good evening, good morning, wherever you are. Let's see. Okay, welcome into today's session. First off, today that you will be Alexis and me. Alexis will be doing fundamental analysis. I'll be doing the technical analysis. Alexis is not with us today, but she has already submitted her recording, so I have to trouble Sam to actually play her video first, and then I'll go after that. After you, Sam. So Sam is preparing Alexis' video.
Hi everyone, this is the recording for this week, and here is what I will be looking at for the next week. So next week I'm looking for the dollar sing, mainly because I think price has bounced off a 1.28 level, which was kind of, I think, happened last week, and I was looking for a place of re-entry. Now, I think 1.30 would be a really nice place to enter. However, I suspect that the MAS, Monetary Authority of Singapore, is actually quite keen to keep the support for the strong Singapore dollar because there is still a small bit of rising inflation. So the inflation in Singapore has cooled, but the central bank is poised to stick to its 3-year-old policy stance that supports a stronger currency, given it's risking given there's like higher prices from the Middle East conflict and the US presidential election. But I think the upcoming policy review on October 14 will be interesting to kind of see whether or not the Singapore will be kind of cutting its interest rates, which is the first time in 4 years, as done by the US Federal Reserve, the European Central Bank, and Bank of England, the three banks which have actually reduced its interest rate. So unlike other central banks, MAS uses the trade-weighted value of the Singapore dollar to achieve price stability. And this balance of too strong Sing dollar versus making exports more expensive to overseas markets, or deterring tourists from visiting Singapore would be a concern as well. So I think if we kind of look at the tradingeconomics.com to kind of see where the Singapore dollar levels are at over here down below. So Singapore is currently facing a 2.2% inflation rate. Unemployment is held pretty nicely at 2%. The interest rate is about 3.11, and however, what really I think it would be a slight concern would be the GDP growth rate is still a little bit soft. All right, so I do think there is a little bit of softness coming in. We can actually see the Sing dollar or the dollar Sing actually, finding a bit of resistance at this 1.3. I think we'll call this a 1.31 line. So I'm going to put a trend line over here. Okay, let me insert a trend line over here. This would be a 1.3. I think 1.3. Let's put a line over here. This is 1.31. Okay, I think a 1.31 level over here would be something that I would think would be a little bit more of a concern. Okay, give me 1 second. Okay, the trend line is not coming up, so I'm just going to kind of draw it in over here for this moment. All right, there you go. So this is the level that I'm looking at to find a little bit of resistance. I suspect the Sing dollar will kind of meander in this level, dipping slightly below the 1.30 level, traveling, I think, somewhere in this region in the short term as we head towards the US election. So who's ahead in the US election currently? You can actually see that votes are kind of favoring Kamala Harris at the moment. This is updated, I think, on a Saturday early morning, with Donald Trump, lagging behind a little bit. But it's really 226 to 189 is very, very close. And the question really is the US dollars softness going to be changed in the upcoming November season. So if we look at the dollar yen, okay, hang on, my chart has just lagged a little bit. Okay, let me see if I can get this back up. Let me refresh this. Okay. Okay, so if we look at the dollar yen, all right, the dollar yen is finding a little bit of resistance near the 150 level. Now the question is whether or not the dollar yen will break above the 150 level, giving us a little bit of room to the upside. I think we should be trading the dollar with a little bit of caution in the month of October going into November because of the election news. I suspect that the US dollar the US dollar yen will also kind of travel within this range bound over here, but it's quite a big range. We have about 140 to about 150. Now, two things factor into the slightly questionable direction of the dollar yen. Number one, the Japanese government is not changing its stance of, they don't intend to kind of increase interest rates yet, but they keep hinting at a potential increase in rates. So I suspect that there will be strength in the yen coming, but it's more of a range bound move where traders looking at the markets, watching the Japanese government potentially maybe trying to increase interest rates, we should see dollar yen fluctuating within this range at least for the short term. So there's a lot of I do recommend a lot of caution trading the US dollar as we come into election week. It's just about a month more, about three and a half weeks. On the 5th of November is the election date, and I do suspect that more volatility is coming in, which means not so much of trend trading, but more of a range bound trading for a lot of the dollar pairs. Now, two currency pairs that I had my eye on for a while is the pound Aussie and the pound Kiwi. I'm slightly bullish on the pound and soft on the Aussie and the Kiwi. However, seasonals are not in our favor. I would want to recommend a little bit of caution, because if we look at the seasonals, let me pull up a couple of seasonal charts just to show you guys where it's coming from. So while I am bullish on the pound, the question is really more about timing. While the pound does have quite a positive sentiment coming up from its markets, I think sentiment-wise, it isn't in our favor over here. You can see it isn't in our favor for a very strong pound until probably towards the end of December. So pound is going to be a little bit more flattish. You have a little bit of an uptick third week of maybe second week of October, which we are already almost ending, and then pound falls a little bit flat over here in the seasonals, flat coming into November, and maybe end of December it pops towards the upside over here. Now, if we compare the other two currency pairs I have, which is the Aussie and the CAD, so over here, the Aussie does have bullish potential all the way to the first week of November. However, the statistics aren't very strong for the Aussie, so I do think we should. I do think take a pinch of salt. The seasonals might not follow this year, mainly because the China market is a little bit soft as well. All right. Now Australia is very big. Australia has about 40% exports with in terms of trading partners with China. So while seasonals does give us a bullish Aussie dollar in the month of October leading into November, I do think it will be dampened a little bit by the softer China market. Now, New Zealand dollar very similar as well. October into November, slight bullish uptick. Okay, slight bullish uptick with a bearish momentum coming in first week of November. So I'm actually pretty keen to kind of be a little bit more patient and wait for that pound Kiwi longs coming towards nearing the first week of November. I do suspect that the pound Kiwi, pound Aussie would trade within a range for a little bit. So the range I'm looking for pound Kiwi is really just within this area. I do think the support and resistance areas are good places to kind of take trades on. I do prefer a long position, and over here on the top would be my preferred area of profit taking. As my bias for the pound Kiwi is generally to the upside. However, really bearing in mind, very mindful of the seasonals that are not quite lining up. All right, so I think it's again going to be a bit sideways for a while. Very similar story with the Aussie. I do think we should see pound Aussie trading somewhere within here, and if it does pull back a little bit more over here, I do suspect with a stronger pound, we should find pretty strong support level over here. You can see price went up almost touching the resistance level, giving us a lower high. All right, we do have the lower low, so we do have cyclicity in a downward move, but I suspect there will be a strong support coming over here as well because the statistics for the pound, for the UK is actually pretty decent. All right, so the currency pairs I'll be looking at for the next at least 2 to 3 weeks would be the dollar Sing, dollar yen, pound Aussie, as well as pound Kiwi, and of course anything to do with the dollar. One eye on the election. All right, if Trump wins, I do suspect a softer USD will come into play really quickly. However, the US dollar has been doing pretty well. For most of the past decade, the dollar has already benefited from a steady inflow of capital into US public and private equities and bonds, in addition to foreign funds coming to the US for direct investment. So the attractiveness of dollar-denominated assets has been bolstered by strong growth, relatively attractive bond yields, and there's also expectations then that an innovative technology sector could also help propel the US assets towards the upside. All right. So over here, although the dollar has recently weakened against its peers, I do think there is potential for dollar strength coming towards the end of the year. Again, one eye on elections. The dollar could strengthen if the November US election results in a broader, more aggressive trade war that weighs down on expected growth overseas while reviving inflation at home, leading the Fed to kind of slow down its easing cycle. All right, so this is what we'll be actually looking at. That's all I have this week, and these are my currency looking for the next period. Thank you for joining me this week, and just everyone.
I think towards the end we can't really hear Alexis really, but hopefully the gist of her message, you all have gotten it. No, actually I do echo Alexis' sentiments about trading carefully the US dollar. Yeah. You might be interested if you want to trade the US dollar, you might be interested in checking out the seasonal patterns or even how the US election actually affected USD during the past elections. For my limited knowledge, I am really saying limited knowledge. What I know is that usually when the Republicans win, the USD should rise. When the Democrats win, the USD will be dampened a bit simply because Republicans tend to actually pump more money into the economy. Yeah, so for the short term, that the USD actually benefits from it. Now, the stock market is actually the opposite. I think for the past presidential cycle, usually when the Democrats win, S&P will actually rise more. When the Republicans win, S&P usually actually fall. Yeah, it's kind of funny because Republican is actually more pro-business. If I'm not wrong, please feel free to go check it out and just double confirm my words. Yeah, so there are impacts because the Republicans and Democrats, they have different approaches to the economy. Yeah, but I'm not an expert on that. So okay, with that, let's go into an area whereby I am much more comfortable with. So first off my list, let's go through a technical analysis for each of the currency indices. So again, the currency indices are just the currency itself. It is not paired with any other currency. So from there, I just simply mark out my support and resistance level, and then I'll go about determining which one is actually strong to trade against another. Okay, the first of my list is actually the Canadian index. Have been maintaining this for months. That the Canadian, I'm on a weekly chart by the way. This is not the daily, this is not the 4 hour, the weekly chart. So the weekly chart actually gives me a very, very clear cut, usually give me pretty clear cut as to where I should be trading. So now, I don't think anybody will actually dispute my words when I say that the Canadian index is on a range on a weekly chart. From you see 2022 September till now. Very nice range, right? So price, go up, come down, tries to go up, come down. Again, this level has been tested many times. Unless something really drastic happens, I do have pretty good reasons to believe that the Canadian currency will actually strengthen at this level. Yeah, I mean, it may not need a perfect touch, but this is technically, I do expect CAD to actually strengthen. We just need to see which currency we are trading against for us to gain the best opportunity. Yeah, and sometimes a little bit of patience help. So accordingly, CAD is actually have the higher chance of strengthening for the next 2 weeks. Keep a lookout. Now, the next on my list is actually the New Zealand dollar. Just to give you a reminder, is that the green line, I mean the green and red line is actually the hard support and resistance level, which usually is the whole number, $70 and $60. And then my short term will actually be the white line or the white boxed. Yeah. So against New Zealand dollar, you can see that since last year, May 23 till now, really pretty nice range, right? Yeah. So price is actually fast approaching the $60 level. And you can see that it has actually broken in the past. It's a bit messy, right? So, but I also do have reasons to, pretty good reasons to believe that it will actually strengthen from this area onwards. Now, I do not say this line, this area, you can see that price broke through. So be a bit patient, maybe give it 2 to 3 weeks, wait for your long opportunity to go up for the key, for trading Kiwi against any other thing. Now, next on my list is recently just updated level. You can see between 120 to 110. Again, whole numbers pretty much amazed at it. Sometimes price bounce off this level pretty nicely, and you can see that this is actually a temporary level, which has worked pretty well in the past, right? So you can see that it goes to 120, it comes down again. Like I said, this is a temporary level because its price really range between 1 or 2 bars only. Yeah, so it may fail quite easily compared to the hard levels. Yeah, so for anybody who want to trade against the Swiss, keep a lookout. I would say Monday or Tuesday, give it a rest and see whether the lower time frame, usually I trade the H4, if really bounces off this level. If it does, then I would say we have more confidence in trading the strengthening of the Swiss. Yeah, again, doesn't have much room to run, so don't be too greedy if you are trading long Swiss. Yeah, give it a 2 to 1, 3 to 1. That is enough. At least respect the historical data that it doesn't really want to run very long, but it does have space to do that. Now, really in the middle is actually the British pound. Yeah, so I'm really parked this here. 130 is really a nice hard level for price to actually bounce off. But again, not entirely sure it will actually bounce off or be like this area over here, get whacked back and then comes down again. So in lieu of this, I don't see it as a very clear-cut way for me to trade the British pound. I'll probably just stay out of it. Now, so we have talked about the strengthening of the currencies, middle ground, which I really try to stay out of because I'm not entirely sure. And then I will go into the weakening of the other currencies. So my list, the strongest of the weakest will actually be the Euro indexed. Yeah. Why I would say that, although I would suspect that it actually weakened, you can see that this first top, second, third top, very nice. But it doesn't give me a very decisive bearish close. So as such, I'm not entirely sure that price will actually weaken all the way. It might come back for a retest again of this level, and then it will start to weaken. Yeah. So I would say give it 1 more week, and then we'll see some clarity whether price really want to get rejected by 110. Now, for the Japanese JAP index, price is still going down, but really it's in the middle of nowhere. Yeah, so you can trade this shorting of yen, but don't build too much of a heavy position. Nothing much to be said about that. Now, DXY I would say is more or less in the same position as the Euro index. Both are in a very nice horizontal level. Price is still within this bracket. It doesn't really have a very nice decisive close, but give it 1 week or so, you might see a very clear either rejection or bounce off this area, and that's where we'll be more, for trend trading wise, it will be better to trade. Now, for breakout tradings, then that's actually another story. Yeah, because whenever price comes to this area, it might actually prove to be the start of a very good trending run. Otherwise, again, because USD is in the limelight a lot these days, volatility is really high, you may just wish to skip trading DXY altogether. Now, the clearest of what I can trade in terms of weakening of the currency is actually the Aussie index. Again, compared to the, if you remember, Canadian index, Kiwi index, very nice range. Same thing for the Australian dollar. I probably just need to revise this. you can see that price is in a, I wouldn't say nice range. I would say this is kind of a messy range, but clear cut, it is in a range, right? So you can see that price just last week rejected, now it's coming down. So I will actually follow the momentum, just gonna short it. Now, when it comes to bottom of this area, about 61.5, you may want to relieve your positions ready. Yeah, don't hope for home runs and just try to squeeze out a bit more, because whenever it comes to about 62, it is not so clear cut already. Yeah, but given that this is a weekly chart, for if you trade near here and for price to all the way travel down, this will easily give you a 8 to 1, 10 to 1 kind of trade if you are willing to hold that long. Now, restore connections. All right, so with that saying that, it's very clear cut that I'm going to short Aussie when the opportunity arises. So you can see across my tabs, it's just Aussie, Aussie, Aussie. Now, CAD is the strongest, Aussie is the weakest. So naturally, I'm going to position shorting of Aussie. You can see that this may be the formation of the right head and shoulder already. You can see this is the left shoulder, head, price comes down, right shoulder. Yeah. And this is on the 4-hour chart. So from the weekly chart, I've done my analysis. I go to the 4-hour actual trading chart. If price on Monday gives me a pretty bearish move, I may just jump in, put my stop loss right at the high of here, and then build my second position, third position. Or it's a break and retest, and I'll just keep shorting Aussie CAD, right? So this is top of my list. This is a chart whereby I will really look at closely. Aussie Kiwi, again shorting of Aussie. Again, at this point, because of all this same currency that I'm trading, you really want to watch your risk management really. See which one actually give you a better position. Now, Aussie Kiwi seems to me that price is already weakening already. So what I'm waiting for is price to actually weaken further. Give me some sort of retracement. Now, the retracement may not be strong retracement. It may be a very weak retracement. Yeah. And then any sort I'm waiting for, not necessarily at this level, I'm willing to actually jump in for a short Aussie Kiwi. And the last of my Aussie shorts will actually be Aussie Swiss, which is actually playing out now. Yeah, so this is actually not as clear cut as the other two. But if there's a clear price action that I can actually jump in, I will do so. Right? So I don't really have a bearish close as of now. In fact, it's quite messy at this area. So if price does give me a pretty nice price action or rejection of this level at 0.579, I will trade it, but I will probably park my stop loss higher at this level instead. And then I can actually trade it all the way down to about 0.56 area. Yeah, it will still give me a pretty decent 4 to 1, 5 to 1 kind of trade. All right, so these are the top 3 charts that I will keep lookout for. One other chart whereby you may want to consider is actually the pound dollar. So let's do a bit of revision. So you can see that pound is at 130. So now I'll be using the word highly speculative that it will actually bounce off 130. I park pound in the middle. I'm upfront saying that I'm not entirely sure, right? So this is actually a very highly speculative move for me. So if it does bounce off, this is very akin, not akin, this is actually a reversal trading already. Right, I'm just waiting for price to actually give me one push downwards, which gives me a small double bottom, and then I'm willing to trade upwards and ride it long. Right, so this kind of trade I'm willing to go for 8 to 1, 10 to 1, sometimes even more. Just need to be patient and set it out. Right, and because precisely this is actually paired against USD, highly volatile pair, high risk, high reward. But please watch your risk when you're doing this kind of trading. Yeah, so I'm really more technically inclined, just waiting for it to give me the right kind of signal. Now, if you're worried that if you are not comfortable trading a double bottom kind of price pattern, simply just wait for a break and retest, break of the neckline, retest of this region. You will still be in early enough to actually catch a good move if it ever happens. Ashwin, polar bear style, yes, I am. Maybe worse than polar bear. I don't know what you want to call it, dinosaur style. All right. So with that, thank you for joining me, Alexis. Today, this is hers is a fundamental analysis. Mine is a technical analysis. Hopefully, it benefits